All righty. Thanks everyone for joining us today on our monthly training webinar. Today we're going to talk about HR compliance challenges, HR regulatory things that you probably should be aware of. Some of these things you may already be aware of, some of these things you may not. Some of these things we are going to dive in deeper on different webinars as well, because they're new or evolving topics. So we're going to go through some of the minimum wage changes. Hopefully these are not a surprise to you. Classification rules, these also are hot topics for Department of Labor. Blended overtime, that too is a hot topic for Department of Labor right now. So we'll do a review of that. Remote worker compliance, that definitely has become more and more relevant since COVID, right? We all have people working everywhere. So we'll talk a little bit about that. Pre-tax Section 125, 127 plans. We'll go over some of the highlight of federal and state laws for Maine and some of the New England states. And then we're going to talk about tipped employee compliance and how that works for our restaurant folks. So let's look at minimum wage. So first, we know in the state of Maine, and actually throughout in Massachusetts as well, and many other states, federal minimum wage is now indexed with CPI, or cost of living increases. So we know that Maine has gone to $13.80 an hour this year. Portland and Rockland both have a slightly higher minimum wage. They're at $14. So that is relevant. New Hampshire, they keep the federal minimum wage. They're at $7.25, and Massachusetts is at $15. So rates are on the rise. We've seen a pretty dramatic increase in rates in the last couple of years, especially as the cost of living has continued to increase. Maine's increase was almost 9% this year. So that's pretty dramatic. So we'll have to keep an eye on that. We certainly will continue to keep you posted as those increase as well. For our tipped employees, we know this year in Maine, we're at $6.90 per hour. That's the tipped wage, and again, $7 in Portland and Rockland. So that's a tip credit that tipped employees get to take and tipped employers get to take. New Hampshire, again, the federal minimum wage, $3.26, and then Massachusetts, their tipped wage is a little bit different, and they're at $6.75 this year. So we talk about our exempt employees. I'm going to talk a little bit about exempt versus non-exempt employees on the next slide, but there is a minimum threshold for salaries for exempt employees. So in the state of Maine, we do have a specific law that ties to this. Ours is $796 per week. That is the minimum salary threshold that you have to pay an employee that's considered salary. There are other duties tests associated with becoming an exempt employee, and basically a salary or non-overtime employee. But in Maine, we're at $796. Both Massachusetts and New Hampshire use the federal rate, which is $684 this year. That continues to increase as well. Federal Department of Labor adjusts that annually as well. So we're going to talk about the differences between exempt and non-exempt right now. Let's start with that exempt versus non-exempt, because we were just talking about that. So exempt employees are not eligible for overtime. They are paid a salary, right? So they are paid a fixed amount, but they have to meet that minimum salary threshold in the range there. The biggest piece, aside from the salary wage perspective, is the job duties test. So there are specific carve-outs in the law for job duties that you have to be performing in order to be an exempt employee. Those are typically managerial positions, sales positions, professional positions, doctors, lawyers, those types of positions. Car dealerships have a carve-out. They've worked their way into the state law for that as well. There are duties tests that must be met in order to do that. The other thing to think about, which we've had Department of Labor rulings on, is if an employee, for example, if you're a seasonal business and they're salaried, and if the employees that they're managing are not working in the winter, Department of Labor has told us that if they're not managing employees at any given time, they're no longer eligible to be exempt. You need to be paying them an hourly wage when they're not managing employees. Okay, so that duties test is important, and these are things that Department of Labor does crack down on, and it's definitely something that we see as a rapidly evolving compliance challenge for businesses, especially as that salary, the wage threshold continues to rise as well. So non-exempt employees are paid an hourly rate. They must be paid overtime, and they can work pretty much any job. There's no restrictions on that. So they can work those as well. The other classification that's important for employers is the difference between a W-2 and a 1099 employee. So we have a lot of folks that say, no, I'm just going to 1099 them. We'll give them a 1099 at the end of the year. They're not going to pay any taxes because they're a consultant or a contractor. That's not always right. Most of the time, it's actually not right. Contractors are specifically bound by two tests. They're a duties test, which they have to be kind of performing their own work, you cannot be directing them. They cannot be using your supplies and materials. You cannot be telling them how they have to do their job, for example, or when they have to do their job. They are exactly that. They're a contractor. They're bringing their own tools, their own supplies to do this job, right? If you are telling them how and when to do it, generally speaking, they are an employee and they must be issued a W-2. The 1099 contractor is, again, not considered an employee. They don't have to pay workers' comp. They don't have to pay taxes. They're really a sole independent contractor. Many of these folks know, if you're a true contractor, you know this because you have to pay all your own self-employment taxes, right? So that 7.65% employer share of the FICA tax has to be paid by you. The company doesn't pay that for you. So that's a big deal and adds significantly to the tax burden of these 1099 contractors. Whereas a W-2 is an employee, you can direct them however you want. You can say, you must do it my way, when, where, why, and how. You have taxes withheld and paid by the employer, and the employer pays taxes on your behalf for Social Security, Medicare, unemployment, and in some cases, paid family medical leave and some other things, which we'll talk about. They get a W-2 at year end instead of a 1099 to reconcile all of this stuff. So it really comes down to that duties test with the contractors to make sure that they're classified correctly. Big topic lately, blended overtime. We see this a lot in hospitality, but we see it also a lot in manufacturing as well. Anybody that works multiple rates of pay and works over 40 hours must be paid at a blended overtime rate. Department of Labor has also opined that any non-discretionary income, like bonuses or commissions, also must be calculated as part of your blended overtime. So that creates a little bit of a sticky wicket as far as overtime goes. You're not paying overtime at the rate for which they enter overtime. You're really doing a blended calculation, and we set that up within ISOLV to make sure it's calculating correctly. So it's not a huge deal, but it's definitely a little bit tricky to calculate. So basically, we take all of the hours, come up with a proportional rate of pay, and then figure out the overtime based on that. So I'll go through, in our example, Julie here, she works 3 different jobs at her restaurant. So again, we've not calculated in tips or service charges or anything like that in this example, but that also adds to the complicating factor. Those types of things do need to be included in this as well. So first, we take her base rate from all of her jobs and take that 50 hours and divide it by her gross pay. So we know she's taken 50 hours times that base rate. Then we're going to add the differentials in, and we're going to add all that extra pay in for that differential. We come up with our total gross and divide that by the number of hours worked. So we know that on average, based on the hours that Julie has worked, she's got an $18.50 average pay. Then we multiply that by 1.5. Then we have to go through, calculate her base pay for 40 hours, and then we have to calculate that 10 hours of overtime at that blended rate. So this example is not terribly difficult, but I will tell you, once we start getting into the tips and commissions and those types of service charges and commissions, tips are not included. That is a discretionary, compensation. So that does not need to be included. But service charges, commissions, those types of things do need to be included. So blended overtime, kind of tricky, but we've got that built into ISOLV, so hopefully there's no issues with that as well. Remote employees. So remote employees are definitely a new challenge for us, for everybody. It's really easy for us to say, hey, we have a great employee. They have moved to North Carolina, right? They want to fly south. And we want to keep that employee because it's all hard for us to find these employees. So we have to then pay all the taxes and comply with all the laws in North Carolina or whichever state those employees are in. Payroll taxes are based upon the location for which an employee works. So if an employee is working in North Carolina, you must pay all associated North Carolina taxes. You must comply with all local and state laws. You also must include labor laws. If there's any paid medical leave, if there's any other state laws, you are now responsible as an employer to comply with those laws. And there may be penalties if you're employing someone and you're not meeting certain laws. I mean, if you look at like New York and California, Illinois, very heavily regulated states, those states in particular have tons and tons of regulations, wage and hour regulations. California, for example, has an 8-hour minimum wage. So if you work more than 8 hours, in a given day, you get paid overtime rather than a 40-hour overtime. There are lots of different laws across the country that you must comply with. If someone is splitting their time between multiple states, you have to keep track of that and you have to report based on that. So if you have someone, that employee that moved to North Carolina because they wanted to be warm in the winter, flies back to Maine and works summer here, when they're working in Maine, you have to pay, you and they both have to pay Maine taxes. So we have to move those employees. So it's really important that that we're keeping track of where our employees are working and that the taxes are set up correctly. This will mean you have to register with each state for the taxes and again, file those, which will help you take care of as well. We are doing a full webinar on remote employee compliance, Tuesday, the 18th of April, our normal time. So lots more information on remote employees. Again, this becomes more and more relevant every single day. We've found every once in a while, we have a client that slips by us and has hired someone elsewhere, or an employee has moved elsewhere, and we're a little behind the 8 ball in helping them keep compliant with that. But this this topic in particular is more and more relevant every day. So more to come in April on this as well. Section 125 and Section 127 plans. So these are both pre-tax benefits. Section 125 plan. So everyone comes to us and says, we have health insurance and we want that deducted from our employees on a pre-tax basis. Well, until you can prove to me that you have what's called a Section 125 plan in place, we technically should not be doing that pre-tax, right? So a Section 125 plan is literally a document that you're going to spend a couple $100s a year on, going to sit in the file for if you ever get audited. But that 125 plan allows you to have certain benefits taken on a pre-tax basis. And by pre-tax, that means they're exempt from federal and state income tax, as well as the Social Security, Medicare tax, and unemployment tax. So it's a really big benefit for employees and employers, right? You're not paying that tax either, but there is a plan administration cost. And generally speaking, like I said, it's about a couple $100s a year. You update it once a year to make sure your plans are all listed correctly. And then you switch that, we can go ahead and do those pre-tax, right? So keep that in mind. If you have health insurance or dental insurance or any type of those things that you want to be pre-tax, you need to have a Section 125 plan. We can make referrals to you on whom you can get those from. So a Section 127 plan, this is particularly tied to student loan assistance. So this is relatively new in the last 5 years or so. It keeps getting renewed by Congress, which is really nice. It got renewed for a long period of time in one of the most recent omnibus bills. It's a really nice employee benefit that you can offer to your employees. The Section 127 plan allows you to contribute up to $5,250 annually for qualifying educational expenses. Okay, so this is student loan repayment, this is tuition assistance, those types of things can all be repaid pre-tax to the employee and deductible to the employer if you have a 127 plan. Same idea as the 125 plan. It's a document that sits in the file. When you get audited, they're going to come looking for it, and just make sure you have it or you're out of compliance with it. So the payroll piece is easy. We will put that on there, on their pay pre-tax. We'll get that all done. Same thing with the deductions, but it's having that document in the file to make sure that you are in compliance. So federal and state laws here. So we have just a sampling of federal laws that you may want to be aware of and that you are probably in compliance with through other vendors as well. The first is the ERISA laws. These are all pension and health plans compliance. So if you have a 401k or you have a simple IRA or any employer-sponsored retirement plan or any employer-sponsored health plan, there are specific rules and regulations as part of ERISA that need to be followed. These are plan features, funding, responsibilities, fiduciary responsibilities, notice requirements. ERISA is a monster. Generally speaking, your health care agent or your retirement third-party administrator will handle a lot of these requirements for you. But basically, everybody must comply with ERISA if you offer a retirement plan or a health plan. And again, most of the time, these are being taken care of by your health insurance agents or your financial advisor, third-party administrator through retirement. HIPAA. HIPAA we don't see a lot in the private sector, but it does still apply to you, right? So HIPAA, everyone associates with healthcare. The hospital can't tell anybody about my private health information. Well, that also applies to you as an employer. Employers and managers cannot access employee health records without consent, and they cannot share that information if they are given it, right? So that does apply to managers, and that can be enforced if your managers are running around speaking about why an employee is on medical leave, for example. That could be a violation of HIPAA. Okay, so keep that in mind as well. When we get to businesses with 20 or more employees, COBRA kicks in. COBRA allows employers to cover employees with health insurance for 18 to 36 months after they have terminated their employment. You don't have to pay for it, but you do have to offer it, and that is a whole administration piece as well. Again, your health insurance folks will help you administer COBRA as well, but that's something you do have to offer. If you have 20 or more employees and someone leaves you, you have to offer them COBRA coverage. When we get into 50 or more employees, we have the wonderful Affordable Care Act, ACA requirements. You are now required to offer health insurance to your employees. When you hit 50 or more full-time equivalent employees, that calculation is very fun and exciting. If you'd like to do that with us someday, we're happy to do that with you. But that ACA law kicks in a lot of regulations. You must offer that coverage. They don't have to take it, but you must offer affordable coverage. You also have to report to IRS every single year to whom you offered coverage and how much it cost as well. So ACA has become rather mainstream since it was passed, almost a decade ago, but it definitely is still a beast and lots of fun to administer. FMLA, you must offer family medical leave for up to 12 weeks. It can be unpaid leave if an employee goes out for health reason, health, adoption, any of those types of reasons, including for an immediate family member. So 12 weeks of unpaid job protected leave you must offer when you have 50 or more employees. So just another law to keep track of. Let's look at a few state laws. So the new one coming down the road is paid family medical leave. This is a trend that is sweeping the country. We are seeing more and more states implement this. There is a bill in the legislature in the state of Maine to introduce this in the session. If I was a betting man, it will pass this year, and the state of Maine will have a paid family medical leave rule within the next 18 to 24 months, is my guess. What this means is employees and employers contribute to a state medical leave fund. It's a small fraction of your pay, 0.5%, generally speaking, on both sides. And similar to unemployment, right? So we all pay into unemployment today. We understand how that works. And this works similarly. So everyone contributes, the employee and the employer contribute to this medical leave fund at the state. And when someone goes out on medical leave for any reason, adoption, pregnancy, family, personal illness, military leave, they can draw on this from the state, very similar to unemployment. So like I said, Maine does not have this today, but there is a bill in the legislature to do this. My guess is that it will be passed this year, given how active the legislature has been, and we'll work on helping everyone stay in compliance with that in the coming years as that gets implemented. Generally speaking, it takes a year to two to get these up and running. So I would say we're probably not going to have to worry about this until 2025-ish in Maine, but I definitely see it coming down the road. Massachusetts does have this in place. It is required for all businesses within Massachusetts. Anybody that has, employees within Massachusetts, right? So if you have a remote employee, you have to pay into that as well. The benefit is an 80% benefit up to $1,129 per week. That's the maximum amount. And you can get that for 26 weeks. So that's a pretty hefty benefit for any medical leave, right? So that's the Massachusetts law. If we look at New Hampshire is a voluntary plan. So they have established this, but it is not compulsory. It is voluntary. You can choose to or not participate in this. It is a 60% benefit, so it's a little bit different, right? And you can only get it for up to 6 weeks, right? So it's a little bit different. Theirs is not, New Hampshire does things a little bit differently. They're the live free or die state, right? So that's a little bit different in how they're administering it. But I will definitely anticipate this coming down the road in Maine very soon. Other state laws we can talk about: paid leave. Paid leave is a big one. We obviously pushed that out in Maine 2 years ago now. So in Maine, we know we have to offer a minimum of up to 40 hours per year, not a minimum, up to 40 hours per year. You have to allow your employees to earn 1 hour for every 40 hours worked, right? And it can be used for any reason: sick, vacation, personal, emergency time, whatever. And this applies to employers with 10 or more employees. So that is the Maine earned paid leave. Lots of other rules in there. We did a webinar on this. We have lots of information on Maine paid leave. If you still have questions about this, we are happy to talk to you more in depth about that, because that is something that is new the last couple of years. With that, you certainly can offer a higher paid time off program if you want, but you have to meet the state's minimum requirements. So want to make sure that you are meeting the minimum requirements, and then you can go ahead and increase more than that. So Massachusetts has an earned sick time policy. There's a little different. You earn 1 hour of sick time for every 30 hours worked, up to 40 hours a year. So this is a sick time law, and this is for 11 or more employees. So theirs is a little bit different in Massachusetts. There's varying degrees of this across the country. It really started as sick time and has kind of evolved into more of a general paid time off thing throughout the country. But this is evolving, and I expect some changes to earned paid leave this year because of one thing we're going to talk about next, which is the vacation payout requirements. So in Maine, this is new as of January 1. If you have more than 10 employees, you must pay out any unused but accrued vacation time that is on the books. And this must be paid out no later than the next payday for an employee. This has to be paid out regardless of the reason of separation, whether it's their decision or yours, right? So if you terminate them or they decide to resign, it's got to be paid out. But the key with this is it's vacation time, okay? So if you have a policy called PTO, if you have a policy called earned paid leave, if you have a policy called personal time or sick time, those don't need to be paid out. The earned paid leave law specifically says you have the choice as to whether or not you want to pay that out at the end of the year. However, the legislature then went and passed this bill and went into effect January 1 this year that says unused vacation time has to be paid out. So it's a little bit contradictory to their own law that they passed 2 years ago. My guess, again, if I was a betting man, that this law is going to get fixed this year, and they're going to realize that they screwed up, even though they knew it when it was in committee. They're going to come back and probably make any paid vacation or paid time off paid out, is my guess. Maybe they fix that this year, maybe they won't. We're not quite sure, but right now this applies to vacation. So if you have a vacation policy, that is there. For Massachusetts, they also have some pay requirements. So if they're terminated through no fault or delinquency of their own or by resignation, retirement, or death, they'll be paid their usual rate of pay for any unused vacation they've accumulated. So again, Mass has a specific payout law as well. But like I said, Maine, I think it needs to do some work on theirs, and I expect that to come maybe this year or next year. Retirement mandates. So we know they have a defined contribution plan for nonprofits in Massachusetts, and they also did do a state proposed mandated retirement plan like we are going into in Maine, but that did not pass. I would expect that to probably come back around given the other states that are doing this in the future. Maine, we're in the middle of an implementation of our Maine retirement savings program. We know that any employer with 5 or more employees is going to be subject to this. What this means is that you either must offer an employer-sponsored retirement plan, which includes a 401k, simple IRA, SEP IRA. Any one of those plans does qualify. If you offer that, you are already in compliance with this plan. If you do not offer an employer-sponsored retirement plan, you must enroll your employees in a state retirement plan. It will be a Roth IRA that will be implemented at the state level. This is in the process of being implemented now. We've done a lot of work with the state on this. We're helping them implement this. We're actually, the state's looking for guinea pigs. If anyone wants to help the state test with this, we'll be happy to pass your information on to the state. This originally was supposed to go into effect the first wave April 1st of this year. The state has pushed that back because the Retirement Savings Board, quite honestly, doesn't have their stuff together. They've just hired an executive director, Beth Bordowitz, which she's wonderful, has been very receptive and is working very hard to get this implemented. We expect this to be rolled out later this year with a full implementation by April 2024. That's the plan. We don't have final dates on when that will happen. Given the timeline they're on, it's likely going to be October or November for the first wave, which would be 25 or more employee companies. Then they'll phase in 15 or more employee companies, and then finish in April with 5 or more employee companies. So much more on the Maine Retirement Savings Program. We did a webinar last fall. We are having another webinar on this topic because it's a big one, Tuesday the 21st. That's next month at 2 p.m. You can register for that. Beth Bordowitz, who is the executive director of the State Retirement Savings Program, will be joining me on that webinar. So that will be a good one, and not to miss that as well. Tipped employees. So let's talk about tipped employees and the fun that comes with those. So the tip credit, we talked about the two different rates of pay for regular employees and tipped employees. The tip credit can only be taken when tipped employees are performing labor that is part of their tipped occupation and quote unquote directly support tip producing work. So if they are serving tables in that manner, they are fine. If they're doing side work, if they are filling ketchup and tartars and sweeping and mopping and cleaning the toilets, that is not tip related work. Technically speaking, you should be paying those employees at the regular minimum wage for that work that is being completed. Okay. So that will mean two rates of pay. Then we have blended overtime to deal with, tips, lots of fun there as well. But certainly the tip credit only comes into play when the employee is doing tip producing work. Okay. Tip pooling. Tip pooling is allowed. However, can only occur for those that do not, tip pooling is allowed. Managers are not allowed to participate in a tip pool ever. Okay, so that's a big deal. If a manager is doing tipped work, they can receive their own tips, but they cannot participate in a tip pool. If members are that don't normally receive tips are on there as well, they cannot use the tip credit on those wages. So if you're a cook or a dishwasher, if you're tipping them out, they don't get to get the tip credit because they're not doing tip producing work. Okay, so that's really important as well. Managers not allowed to be in a tip pool. If there are others in a tip pool, they are not allowed to use the tip credit. Okay. And again, employees, managers, supervisors are allowed to keep their tips, but only the tips that they earn directly. So if you have a manager filling in on the bar, for example, one night they can keep their tips, but they're not participating in the tip pool. Okay. One other item of this, the state of Maine has kind of come down on this. A lot of folks are doing a 2% or 3% kitchen service charge, things like that. That is a specific service charge that you want to keep track of separately and account for separately on your books and in payroll. So if you're doing that, that should not be included in there. That also is not considered a tip. It is a service charge. So that is a little bit differently handled as well. So if you are participating in that type of activity, talk to us so we can make sure you're classifying that correctly. That's a good overview. We have some great resources for you as well. A lot of the stuff that we talked about in today's webinar is in our HR compliance guide. Last month, I actually participated in a webinar, a podcast with Dave Shulo from Career Management Associates. If you go to papertrails.com/HR Power Hour, you can download that compliance guide and a lot more information similar to what we've talked about here. Don't forget about my HR stuff. Employees can get a lot of stuff themselves. They can get their W-2s, they can update their direct deposits, their contact information. They're using timekeeping, they can punch in and out, request time off. Using our benefits enrollment module, you can completely enroll in open enrollment benefits through online. We also have expense management, expense reimbursement within my HR stuff as well. Lots of resources there for you for employees. Don't forget, if employees are having a hard time logging in, go to papertrails.com/help. Lots of videos, step-by-step instructions on how to get information out of there. If you just go to papertrails.com and click on the resources tab, there is tons of information there, new employee setup. All of our webinars are recorded and put there. We have lots of compliance guides and things like that on there. So take a look at that to help out as well. Don't forget about our upcoming webinars. These are two compliance kind of related webinars. Retirement Savings Program is next month. Beth Bordowitz from the state will be joining us. So that'll be a good one as well. Hopefully she'll be able to update us on where they're at. We also have a remote employee compliance. That's really important. We know more and more people are working remote, so that's in April. You can fill out registration forms online, papertrails.com/resources. So I'm happy to take any questions. You can put them in the chat, in the question and answer. I do have one question here so far in regards to blended override. With blended overtime rates, is this set up automatically or do we need to notify you of a person that works in our company? So we probably want to make sure it's set up correctly the first time. There is a little bit of setup to be done within iSolved. So double check to make sure it's done correctly. Once we do that, when you report those hours, they'll automatically be reported correctly and it'll calculate correctly going forward. So we just want to double check, test it, make sure it works correctly, and then it should be fine going forward. So any other questions? Always welcome to reach out to us anytime, of course, but And of course, go ahead and download this. If you go to papertrails.com/HR Power Hour, you can get this a much more complete compliance guide, actually, with more information. So, all right, I'm not seeing any more questions, but certainly feel free to reach out to any of us on our team. We're happy to answer any questions that you have about this stuff. I know it's a crazy world out there. It gets more and more crazy every day. We do our best to keep up on these things and keep everyone in compliance. So this has been recorded and will be posted on YouTube. John will send out a link tomorrow, so you certainly can grab that at any time. But thanks everyone for joining us, and we'll hope to talk to you next month, if not sooner.